Well, the RBA is back hiking again, becoming the first G10 central bank this cycle to tighten policy settings. As widely expected, it delivered a 25 basis point hike in February, taking the cash rate to 3.85%, the first increase since November of 2023. While the decision was favoured by markets and economists, the accompanying language and forecast suggests it's unlikely to be a one-and-done deal. The shift in the RBA's assessment is clearest on inflation. Relative to December when it last met, uncertainty has given way to conviction. Inflation is no longer described as having merely picked up, but as having picked up materially, driven by capacity pressures, and is likely to remain above target for some time. Its labour market commentary also firmed, with conditions now described as having stabilised rather than easing, while unemployment is noted as being a little lower than it forecast. On the supply side of the economy, the RBA has also become far more explicit, flagging limited growth in supply capacity and capacity pressures that are greater than it previously assessed. Economic growth is no longer being framed as being in the recovery phase either, with private demand now described as running substantially stronger than expected and adding to those pressures. As expected, RBA Governor Michelle Bullock avoided providing forward guidance at her press conference, and that's deliberate, with the RBA steering clear of signalling the likely path to rates after past very public missteps. The forecast and statement language, therefore, are relied upon heavily to convey the bank's thinking. And those latest forecasts carried a very clear message. Trim mean inflation, which is the RBA's preferred underlying measure, is not expected to return to the 2.5% midpoint of its target band by the middle of 2028, with quarterly prints of 0.9% implied over the next 2 quarters. With a cash rate at 3.85%, the profile implies that policy will need to be tightened further, potentially unwinding all 3 rate cuts the bank delivered back in 2025. Markets are taking the signal on board, with swaps pricing 89% probability of another 25 basis point hike by May, and a roughly 2 in 3 chance of a further move by August. Whether the RBA goes beyond that will depend on incoming data, fiscal policy decisions, and developments offshore. In the FX universe, the Aussie responded exactly as you would imagine, surging back above the psychologically important 70-cent level. Looking at Aussie US on the weekly chart, there's not much to dislike for the bulls. The price remains in a strong uptrend. It's taken out several key levels, the latest of those being the September 2024 peak of 69.43. It also trades above the psychologically important 70-cent level with an eye on last week's high of 70.94. A variety of moving averages are also turning higher, and when you look at RSI 14, it is trending higher, moving further away from 50, indicating building upside strength. That signal is being confirmed by MACD, which has staged a bullish crossover and is also trending higher. So the signal from the oscillators, from the price action, is firmly bullish, and that's where my directional bias lies right now. Whilst the picture here looks very encouraging for the bulls, my one concern with the Aussie is not so much from the domestic side of the equation that looks very hawkish, but it's from the international side. We know that it's very susceptible to changes in risk appetite, and it remains very skittish, as we saw earlier this week and again on Friday. So to continue this bullish trend and the speed that we're seeing right now, it will likely be determined by risk appetite in the period ahead. The other concern is that it's starting to look a little bit stretched. You can see here on the weekly time frame, the price is trading clearly above the upper Bollinger Band. So this is a pretty rare move that we're seeing. RSI 14 has also gone and shifted into overbought territory. So if there is a change in risk sentiment, that risk seeing quite an unwind in the Aussie. So that is the area to go and focus on moving forward.